Hey, Anmol here. So listen, today I've got a really important video for you, right? Now this video is not going to be a sexy video with a tons of charts and strategies and chart patterns, which I know you guys like. I know you guys love to learn about like new strategies, tactics, or what's going on as far as charts. But today's video I want to really talk about is probably the most important trading video you're ever going to watch, right? This is the fundamental truth without which, no matter what strategy you got, right, what you're doing, you're not gonna make money, right? This is the fundamental truth. And today we're gonna talk about edge. We're gonna talk about probability. We're gonna talk about the hardcore statistics and why you need them in your favor. And we're also gonna talk about how you can take a small trading account and grow it into like a bigger one exponentially, right? So today's talk, get a piece of pen and paper, get ready, and also get a coin. Right? Any coin will do. Pick a penny, pick a quarter, pick a dime, right? Whatever. Any coin will do. And again, you will learn that in the video why I want you to have a coin. But trust me, get a piece of pen and get a piece of paper, get a pen, get a coin, and get ready to take some notes. Because again, this video has the chance to totally transform your trading career. So if you're one who's losing money, it'll probably show you why, right? And if you're making money, it'll show you how you can make more, right? This is the truth of trading. And these are the kind of talks I usually give when I'm invited to speak at proprietary trading firms, or if I'm going to speak at other trading desks. This is the kind of talks I give because this is the truth about trading, hardcore truth without which no trader can ever make money, right? So get a piece of pen, get a piece of paper, not a piece of pen, get a paper, get a pen, get a coin, and pay attention to this video lesson, and you're gonna love it. All right, so how to grow a small trading account, right? That's gonna be the topic of today's talk. Probably one of the most important trading videos you will ever watch. You might not understand it now, but those who've been trading for a while, I think you will totally understand it. And if you're new, take some notes, right? Because this is the important stuff, okay? So, the truth really is that most traders that work from home, right? At-home traders, which is, again, not proprietary traders, not traders who work for a firm, at-home retail traders like you and me that are trading from home, we're just underfunded for the profit goals, right? Most traders that come into the business or that reach out to me via social media, they're all underfunded for their profit goals. What does that mean? Well, it's very important to give yourself the time to build up your investment capital in your trading account before you start focusing on profit goals, right? So if you think you're going to turn like $100 into $5,000, $50,000 in a year, you are setting yourself up for failure, right? Are there stories about people doing that? Of course, but there's thousands of stories, right? Thousands and thousands of stories that people tried and it failed. Because here's the thing, you will only hear about people, the outlier, who got lucky and just made it, right? You'll never hear about like tens of thousands of traders that are losing, right? So if you're gonna think you're gonna turn $100,000 into $100 into $50,000 in a year, you are setting yourself up for failure. This kind of thinking is just not realistic, right? In the beginning, your focus should not be the profit goal. It should be not on making money, but on building your investment capital, right? Your only goal as a new trader is to grow your account, is to build the capital in your account, not on making money, okay? So how do we build up our account faster, right? How do we build up our investment account faster? So, as we say, a lot of traders want to set up their trading account. They want to put some small amount of money in there, and they never want to add to their account, right? They want all their profits to come out of that account that they funded with, right? That's just, in my opinion, that's not the right way to do it, right? Because most people are saying, hey, here's my $5,000 account now. My trading career, everything I'm going to do is going to be from that account. And they never add to it. That's a big mistake, right? So if you have a lot of money, right? If you're like, hey, I already have $100,000, $1 million, okay, great. That might be the way to go. But if you're someone with a smaller account, 2,000, 3,000, 5,000, right, you should be adding to your account. So if you're starting with your investment capital, which is small, it is recommended, it's a better option to add to your trading account on a schedule, right, systematically. So systematically adding every month to your trading account will get you to your goal a lot faster, and are going to help you reach your goals much faster. So let's take a look at an example, right? So let's say you want to start with a $2,000 trading account, okay? And let's say for argument purposes, you trade for 5 years, right? And you average 30% per year. So you're averaging 30% per year and you trade for 5 years. By the way, 30% a year is great. Most hedge fund managers get like 5%, 10%. Okay? So without taking any money account, you just keep doing that, right? Very simple example. Okay? But obviously we, as you know, we can do a lot better than 30%, right? I could probably get that in a quarter. And the swing trade newsletter is already up that in like 3 months. So, we could obviously do better than 30%. It's just for illustration purposes. Let's say you start with $2,000 account. So let's see what happens, right? You start with $2,000 account, you trade for 5 years, and you do 30% per year. Now, after 5 years, right, your future value of your account becomes $7,425.86, right? You started with 2,000 and you made 5,425.86, right? So you started with 2,000 and you end the year after 5 years at $7,425, okay? But now notice how much difference it makes when you add to your small account, right? So again, same example, you start with $2,000 trading account, but you add $100 per month to your account, and we keep the returns the same. So same 30% returns, you trade for the same 5 years, but the only difference is you're adding $100 per month to your trading account, right? Now look at the difference, right? After 5 years of just doing that, your future value of your account will be $20,040.98. So you started total amount with 2,000, right? But you added $100 per month. So total deposits that you made were $8,000 after 5 years, and you earned $12,040 on your account. Now with the same exact $2,000, that ended up to $20,000 after 5 years. That's a tremendous improvement. Let's take a look at the last example again. Same $2,000, same 30% return, but you don't add to it. You made $5,400. Your account balance is $7,400. Same $2,000 account, same 30% returns. Only difference was you added $100 per month to your trading account, and now look at the big difference, right? Now your value is up $20,000, or you made $12,000. That's a tremendous improvement. So what I'm trying to say is, like, by systematically adding a small amount per month, right, and then making those gains on those additions as well, you can greatly increase the speed of your account growth. So that's what I recommend most newer traders do is, hey, Anmol, I only got 2,000, I only got 5,000, what do I do? Well, hey, first, invest in yourself, right? The best investment anybody can make when they have a small account is in yourself, right? Because no matter what investment you're gonna make, you're not gonna really get a big goal in the short term. The best investment you can make is in yourself, in your education, in your learning, right? And then systematically adding something. Now, don't tell me you cannot add $100 per month to your trading account. Let me see your bank statement, right? Let me see all the expenses that you've been making, spending money on movies or music or buying stuff, coffee. Like come on, let's be real. There's a lot of people, if I look at your bank statements, every single in detail, there's a lot of unnecessary expenses. So I don't want to hear it that you cannot add $100. Everybody can add $100 per month, right? So do that. Make small additions to your trading account. That will exponentially increase your curve of growth, okay? Now, I want to talk about some unrealistic trading goals, right? So these are some of the unrealistic trading goals. Hey, I want to trade with a 90% win rate, right? I want to make 100% monthly returns, or I want to be able to make a predictable amount of money every single month, right? Or I want to quit their job in a few months and just start trading a small account, right? I want to become a millionaire with like $500 starting balance. Like, these are unrealistic trading goals that you will only hear promoted by people who are not actually traders, but they are marketers, right? They want to sell you a course. They want to sell you a product. Hey, look at my, weekly trade. Follow this, and you're gonna make money. Or hey, I turned $500 dollars into $500,000. Like, all those are not realistic goals, right? They're just not, right? So have realistic trading goals. So the problem is, most traders, right? They never realize how far they're off the mark. They just don't realize, right? Instead of adjusting their goals to be more realistic, what they do instead, right, rather than becoming realistic, is they go from strategy to strategy. Hey, let me try day trading. Let me try options. Let me try Forex. Let me try futures. Oh my God, this guy's saying penny stocks is really good. This guy's saying buy the breakouts on penny stocks. And you just go from strategy to strategy looking for one thing that lets you achieve your unrealistic goal. And obviously, you're never going to find what you're looking for because that doesn't exist. Okay, so the way you've defined success for yourself is impossible to achieve, right? And unless you adjust your goals to be something that is realistic, you're always going to be unsuccessful, right? That's a shame because they have the power to define their success and join the ranks of profitable traders if they just had realistic goals, right? So in order for us to figure out what expectations and goals are realistic, we need to take a look at historical returns from other forms of investment methods, right? So that can give us like a ballpark of what we should be shooting for. So what do you get in a savings account? Well, if you're in the United States, 0.1%, some maybe pay you 1.5%. That's what you get in a savings account, okay? What would you get money by putting it in a mutual fund? Well, mutual funds average about 8 to 10% a year, maybe 12%, right? Maybe 12%, okay? And if you are putting your money in the S&P 500, in the stock market, 6 to 8% in the long run is kind of the average you can expect, okay? What about a hedge fund? Well, same thing. Hedge funds will usually average about 6 to 8%. So you might find a great hedge fund, right? That might give you 22%. So what about a good hedge fund? So the best hedge fund manager, George Soros, right? He made $4 billion in 2013. $4 billion, okay? And he did so by increasing the fund about 22%. So when people say, oh my God, George Soros made $4 billion. Yes, he made $4 billion, but he made 22%, okay? 22%, okay? So you gotta be realistic. I don't know why, for some reason, right? People think, oh, I can make $100,000, 100% per month. I saw this Facebook ad, and this guy was saying I can buy a penny stock, on join his inner circle, and I can make, X amount of money. Like, that's just not realistic, right? Why do you think they're not George Soros yet? Why do you think they don't have a hedge fund yet, right? So you got to think about those things, right? It's unrealistic. So look, now I'm not going to lie to you, right? It's possible to make much more than 10% a year, as you've seen by my results, right? I do that, like beat those crazy returns, right? But even using proper risk, you can do much better than that, which makes trading the best opportunity, right? You can beat all other forms of investment that I just showed you by a huge margin if you just trade with realistic goals, right? Well, trading is not a get rich quick. It's a surefire way to accumulate wealth faster than any other investment method. That's a guarantee, right? And that is what we're here to do. So the point I'm trying to make is that you should not be expecting to double your account every single month. This is just like having the goal of running a 2-minute mile, right? It's just doomed for failure. It's not going to happen. Not going to happen. Okay? So what to expect trading one strategy, right? So here's the thing. This is going to be the most important slide. Unsuccessful traders think they can find a trading strategy that works in all market conditions, right? A holy grail strategy. They want to make the same amount of money every single day, every single month, right? Regardless of whether the markets are ranging, going up or going down, right? They don't care. They want to make the same amount of money. Well, sorry, it does not work like that. You can only take what the market gives you, okay? And thinking you're going to be predictable, you're going to make predictable profits month after month, trading one strategy is just not logical, okay? The truth is, the strategy you trade will work better in some market conditions and not so much in some market conditions, right? And when the markets are in tune to your strategy, everything is working, you're going to feel like a rock star. You're invincible. Nothing you touch can go wrong, right? Everything you're touching just turns to gold. And then there's going to be times where you might be taking the best trades, right? The best trades, they're just not working. They just feels like they're out of tune with your strategy. And that's all part of trading, okay? And I know that can be frustrating for most traders, but you need to learn that, right? You need to learn that. Stop looking for a perfect trading strategy that's going to work in all market conditions because it does not exist. Understanding this from the beginning of your trading career helps you stick to your plan even when things are not going your way. Okay? If you don't stick with one strategy and you keep changing, like, okay, all right, oh my God, I'm doing this strategy. Oh, it's working. Oh shit, it's not working anymore. Or let me try this one. And now you try that one, and guess what happens? Now that strategy is not working anymore, and the one you were originally doing, that starts working. Right? Type in the comments. Let me know if you found that to be true. Okay? You're saying, okay, oh my God, I'm gonna hold my trades till 2-to-1 target, and everything's working, and then next month your trades are going like 1-to-1. They're not going 2-to-1, right? And you're like, oh my God, 2-to-1's not working. Let me go to 1-to-1. And then next month you start doing 1-to-1, right? And then stuff starts going 2-to-1. You're like, oh my God, let me go to 2-to-1 again. You go to 2-to-1, and then what happens? It starts going 1-to-1. But if you just stuck through that, right, the ebb and flow of the market, you would have got those slow, predictable returns. Whereas most traders just switch from one strategy to another strategy, and guess what happens? They never go anywhere. Okay, so why risk reward is more important than the win rate. Okay, so after all, a strategy that wins more often, that has to be more profitable, right? Well, not necessarily. As a matter of fact, win rate is less important than the risk to reward ratio. The risk reward ratio is used to compare the expected returns of a trade to the amount you are willing to risk in order to achieve those returns, right? So basically, what you're willing to risk to how much you desire to gain. So let's say you're trading a strategy that has a $100 stop loss and a $10 profit target, right? You're probably gonna win a lot. You're gonna have a really high win rate. But every time there's that one loser, and there will be that one loser that's gonna wipe away the 10 winning trades, right? That's what you gotta get. So a few losers wipe away like a lot of your profits, and that can make even the strategy unprofitable, even with a high win rate. So on the other hand, let's say you have a strategy that you have a $100 stop loss, but $150 take profit, 1.5 to 1. With this type of system, you only need to win 50% of the time, half the time. So you could take 10 trades and lose half of them and still be profitable trader in the long run. This is a much better strategy to use, okay? And that's what I personally use every day, right? I do 2 to 1 on every single day trade I take, 2 to 1, 2 to 1, right? If I win even 4 out of 10 trades, I'm gonna be making money, right? Even if I win 40 trades out of 100, lose on 60 of them, I will still make money. Just do the math, right? That's why in the beginning I said trading is a game of statistical probability. It's a game of edge. It's a game of numbers, period, right? So it's much more important to find a strategy, right, that has a favorable reward to risk ratio than a high win rate. In my opinion, you should use a risk ratio of about 2 to 1, right, if you want to be a long-term successful trader and trade stress-free. If you risk 100, you should be looking to make at least 200 on your winner or higher, right? This is arguably the most important concept to grasp if you want to be a consistent, profitable, long-term trader. And every single video I have ever done on YouTube is talking about this. There's a reason, because I'm telling you, this is what you need to pay attention to more than chart patterns and strategies, right? It's not the sexy video. You know, this is not a sexy video, because this is the most important video, that's for sure. So lose half your trades and still be successful. How is it possible to be profitable while only winning half the time or less? Well, it's really quite simple. Whenever you place a trade, there's possible outcomes, right? The trade gets triggered and you stop out. The trade gets triggered and your profit target is hit. The trade is triggered but doesn't hit your stop or your loss, and you close it with a loss, right? Trade is triggered and doesn't hit your profit target, doesn't hit your stop loss, and you close it for whatever you can get, a little profit. So the trick to use a strategy is where overtime wins are more profitable than the losses, right? On average, if we win more of our winning trades than we lose on our losing trades, we can lose half the time and still be profitable overall. So now, what are the benefits of losing half the time? Very important. And I know people don't like to listen to these topics. They all want to learn about how do I win? How do I win? Well, I'm going to teach you the benefits of losing half the time, right? So when you learn how to make money with a 50% win rate, you develop as a trader a very healthy attitude of losing, right? Which is necessary for being a long-term profitable trader. You will be able to stay calm in the face of adversity and stick to this trading strategy where other traders would abandon trading prematurely and miss out on future profits. In short, making money with a low success rate is a trading skill without which you will not succeed. And I hate to say this, but I've worked with so many traders, right? I get hired to speak to trading firms and proprietary trading desks, and I go over and talk to them about this. And after working with so many traders, right, and after doing one-on-one coaching with a lot of you guys that I do coaching with, I've just yet to meet a trader that has a low win-loss ratio and is a long-term successful trader. It's just, I've never met one. So I'm telling you, in short, if you don't master the art of making money with a low win rate, you will not be successful, period, okay? I believe that learning to be profitable with a trading strategy with a low win rate is the most important trading skill a trader can develop. Therefore, I want to go over an exercise with you so you can understand just how powerful this concept really is. So let's go over the coin flipping exercise, right? coin flipping exercise. Now, I want you guys to do this with me, okay? So if you need to pause this video after, I actually want you to pause it. Please don't watch this as entertainment, okay? I don't want people to watch my videos as entertainment, right? I'm doing it for a reason. I want you guys to watch it. That's all my videos are around this concept, is because I really want you guys to learn, right? But I want you to do this. I don't want you to watch this as entertainment or intellectual discussion. I want you to actually do it. So pull out a coin, any coin, right? So imagine you have $100 to trade with, and you're trading $1 per trade. So you're risking $1 per trade. So find the biggest coin in your local currency, and you're gonna flip the coin to represent a trade. If it comes heads, it's a winning trade. If it's a tail, it's a losing trade, okay? So for every winning flip heads, you pay yourself $2. Every time it's a heads, you pay yourself $2. For every losing trade, if it comes tails, you're gonna deduct $1 as a losing trade, okay? So get out a piece of paper or use your computer to keep track of your balance. Now I want you to flip the coin 100 times, right? And recalculate your balance after each flip. Now also pay attention to your emotional response to each flip. I know it's a silly exercise and there's no real money at risk, but the tendency is to be very interested in the outcome of flips when you start. The first 10 to 20 flips, when you get excited about the wins, right, and suffer the losses with tails, after that you start to realize that the odds are stacked in your favor and the outcome becomes less emotional. The whole exercise, and I do this with my coaching students all the time, right? To get comfortable with losing, first you have to be confident in the outcome, right? So the reason I want you to do this is because confidence comes from seeing the outcome, right? So when you flip the coin 100 times, and you will notice, oh, there's a pattern, right? Long term, I'm winning. So when you go through a losing period, when you get losing trades, right? Now it affects you emotionally much, much less, right? Because you have confidence in the outcome. And that's the biggest exercise I give everybody we do coaching with, anytime I go to the trading desk, because once you see that the outcome, the odds are stacked in your favor, right? Now you become less emotional. In the beginning, you're going to be emotional because you don't have confidence in that plan. So, but when you get confidence, right, the emotional response goes away. Think about this. Why do you, if you've ever been to a casino, right, why do you think a casino has, thousands of employees? They're giving you free food, free drinks, paying all the salaries of all the employees, all this big rent they're paying for the casino, their electricity, all those expenses, right? And they're giving you everything free. Why? Well, because they know that the odds are stacked in their favor. They have a little edge. So the more you play, the more they will win. Yes, there are going to be people who win a big amount from the casino. Doesn't matter, because there's thousands of others losing to make up for that. So the casino has an edge. So all they want is to keep you there, and you keep playing because it's stacked in their favor. So that's what it is. When you do 2-to-1, the odds are always stacked in your favor. So you just got to keep trading, right? You got to keep trading. And you will learn this with the coin flipping exercise, right? So after 100 flips, you'll see by trading this way, you will be profitable. And that really is the point. All right. In my experience, most people cannot handle the pain of losing. When they see 1 or 2 losing trades with the strategy they are using, they're off looking for something better or tweaking the strategy until they finally just freaking destroy it, right? So here's a quote I love. Like, give a man a strategy that is sure to make him a millionaire in 10 years, but in the hopes of getting there sooner, right? He tweaks the strategy, optimizes it, he messes with it, right? And in so doing, he does not get there even after 10 years. It's very true. So if I give somebody a strategy, hey, do this strategy, do 2-to-1, just keep trading. You're gonna make money, right? You're gonna make money. But they're like, no, what about on a bear market I do this, or on an inside day I do that, and then what about if a stock goes 1-to-1, maybe I go break even. They're just like they're tweaking it, optimizing and messing with the strategy, and they just ruin the whole odds. They ruin the edge. Do you really think a casino will ever say, ooh, this guy's got a good hand at blackjack. Do you wanna, I will give you. What about you? Want to win half, right? They're gonna negotiate, right? They have their rules and they just keep playing the rules. They're not gonna say, "Ooh, do you wanna cash out? Instead of 500 you're winning, I'll give you 1,000 right now," right? They're not gonna say that. They're gonna follow their odds. Okay, so that's the thing I'm trying to get across. Okay, so as you can tell, I focus on reward to risk. That is the major reason for my success, right? I'm not a great trader. What I am is I'm a good follower of the odds. And that's the major reason for my success, right? Reward to ratio is an important part of profitable trading. And I even use it to track my performance. I don't track my money that I make or lose in dollar amounts. I track it in R multiples. Hey, this was 1 hour loss. This was 2 to 1, right? And then I track it like that. So become a good loser to be a winner. There's one guarantee I can make about trading. There will be losing trades. Did you guys not know that by now? There will be losing trades. You cannot eliminate losing trades, but you can decide how you're going to deal with those losing trades, okay? If you understand the concept of risk reward ratio and how important it is for your long-term success, and you should by now, you should also understand losing trades are not that big of a deal. Yes, nobody, and myself included, likes to lose money or see their account balance go down, but as an investor, your account balance is going up and down. To be profitable over the long term, you need to make more money on your winning trades than you lose on your losing trades. I'm going to say that 5 more times because I really want this to sink in. Over the long run, if you want to be a profitable trader, your average winner has to be bigger than your loser. Over the long run, if you want to be profitable, your average winner has to be bigger than your average loser. Period. Okay? So, and we can accomplish this with reward to risk ratios and using a trading strategy that historically has been proven to give us an edge. But it only works if we keep trading. What do I mean by that? Well, if you're trading and your account suddenly dips, right, and you stop trading, you will be leaving the market a loser. However, if you keep trading, your account will recover and reach new heights due to the positive reward to risk ratio. And that is how you become a profitable trader, right? So in order to keep trading when you suffer some losses, you need to become a good loser. So you have to understand that losing trades are just part of doing business. You have to understand that losing trades are inevitable. And you have to understand that losing trades are going to add up to less than the winning trades over the long run, right? And you have to understand in the long run, your success is predicated on being a good loser. You have to be a good loser, okay? Nobody wants to hear this. It's not sexy, right? Maybe you thought, I'm going to learn how to grow my small account from 500 to 50,000. That's what Anmo's going to show me. But no, you have to learn how to lose. And what do I mean? Now, I don't mean you're struggling, you're losing money, you have no idea what you're doing, you've never taken any courses or education. I'm not saying you keep trading because your strategy might be horrible. Your strategy might suck, flat out, okay? So then you don't stop, you don't keep trading, you stop. First you learn how to do it. But if you learn and you have a positive edge that, hey, I'm going to win X amount of my trades, then all you got to do is keep trading, right? All you got to do is keep trading and the results will add up, just like the coin flips, right? Just like the coin flips, right? So that's what I'm really trying to say. To be a winner, you need to know how to lose and you're going to need to know how to keep trading. Now, this is not just for traders, but a prerequisite for success in any kind of investment that you can make. Now, let's take a look at this. These are the S&P 500 historical returns, right? And again, S&P 500 over the long run is a fantastic investment, right? But notice there's losing years along the way. But if people just kept their money in, the long run, the winners are bigger than the losers, and there are more winning years also that just historically you're going to make money, right? So check out this Apple, returns of the stock of Apple, right? Look at that, right? So many losing years amongst the winning years. But does that make Apple as a lousy investment? No, Apple's a great investment, right? At least it was. So losing is part of being a great winner. So to be a winner, you need to be a good loser. You have to learn how to lose. You have to learn how to take multiple losses in a row. You got to learn how to take it in the chin, right? And you keep trading. You need to take a long-term view and trade without fail for multiple years to achieve your true profit potential. So I really hope you like this. And you know what? Let's actually do one more thing. I was going to end this video now, but I want people to do the coin flipping exercise. So let's do it right now. All right, since I know a lot of you guys are procrastinators, I'm also going to do this exercise with you. So again, this is just a regular old quarter, US quarter. I don't know if you guys can see it. It's out of focus. A regular old just US dollar quarter. So we got heads and we got tails. And I've got a notepad here. I'm going to write down +2 every time I get a heads and -1 every time I get a tails. I'm going to write it down over here and let's get started. Tails, first one's a loser. Tails, second one's a loser too. I'm going to write that down over here. -1, -1. Okay. Boom. Heads, +2. And just like that, we got our 2 previous losers back with 1 winner. So I'm going to write that down over here. +2. Okay. Oop. Heads, another winner. Tails, a loser. Put that down over here. All right, so obviously I don't think you guys want to see me sit here and flip the coin 100 times. So I did it for you. I flipped it 100 times and I wrote down in this notepad, just like this, what I got. I don't know if you guys can see it. So I wrote down, basically ignore my handwriting, but I just wrote down a bunch of +2s and -1s for every loser. Now, you can see this is a great, I guess, analogy or metaphor, right, for trading. This is how trading really works, right? You saw we started with 2 losers in a row, and look at this thing right over here. I don't know if you can see it, but there's a bunch of -1s in a row, where it's just like loser, 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 loser. And that's how trading can feel like sometimes, right? You take a trade, it might be a good trade, perfect strategy, just doesn't win, right? Loser, loser, loser. And just like that, there was also a period in this strategy, as you can see here, where you could do no wrong. +2, +2, +2, +2. A bunch of +2s in a row. Right? That's what trading is. Sometimes you just win. But overall, there's a bunch of +2s and -1s. So I'm going to go to the calculator, total this out, and see what we got. All right, so I'm back. So I did the math. So basically, we got heads 48 of those times. So out of 100 flips, we got heads 48 times, and 52 times we got tails. So we actually lost more than we won. 52% of the trades were losers, 48 of them were winners. But check this out. You win 48 of the times, but you win $2 each time. So what did you make? $96, right? Now you lost 52 of those times. So you lost more than you actually won, but you lost 1 of the times. So what did you lose? 52. So 96 you won, 52 you lost. Subtract that. Guess what? You're still profitable by $44, right? So this is what I'm trying to say with trading. Did you guys just see that? Right? We lost more than what we won, but overall we were profitable. And that's how casinos operate. That's how casinos function, right? Do you think they're just going to give you free drinks for no reason? Do you think they're going to give you free food and pay salaries of thousands of employees for no reason? Do you think that, give people free hotel stay, right? Free resort stay. They'll pay for their flights just so they can come play the casino. Why? Because they know over time they got an edge. Just like this flipping exercise, they have a little edge. So the more that people play, the more the edge compounds that they're going to make money. And that's how trading really works if you do it correctly. So learn how to lose. That's the biggest thing I could say. All right, so I hope you really did that exercise that I told you about. Did you guys do the exercise? Right, I really want you to do it. Like, if you haven't done it, please don't use this as an intellectual discussion or a video. Actually do it. There's a reason behind it. It's to give you confidence that you don't yet have. It's to give you that confidence. So I really hope you did the exercise. If you didn't, shut off this video, pause this video, and go do it right now, right? Again, if you did it, type in the comments below. I want to hear what results you guys got by doing this exercise, right? So type in below what results you got, and you will also be able to see what results other people got by doing this exercise. So flip the coin 100 times, take out a piece of paper, right? Write it down every time what you get, right? Heads or tails, +2 or -1. Right? Every time you get a heads, you make +2. Every time you get a tails, you lose -1. I want you to write it down. And I want you to type in and share with the community what results you got by doing this exercise. And you can also see what other people got as far as when they did the exercise, right? And I hope you got some aha moments, some light bulb moments in your brain that just clicked, right? So I want you to type in what you learned from this video. right? This is your exercise for today. Type in what you learned, type in the aha moments, type in the light bulb moments, and share with others what you got. Right? Out of flipping the coin 100 times, how many times did you get heads? How many times did you get tails? What your total profit and loss was, and what you learned by doing this exercise. So again, stay safe, stay profitable. Thank you.
How would it feel if you were truly in charge of your finances? Happy? Undisputed? Independent? Stress-free? It's great to feel that way. But the big question is, are you really in charge of your finances? If the answer is no, that means you've been missing out on what trading has to offer. Or maybe you've just been struggling to find the right trading mentor. Don't worry, we're here to help. At Live Traders, you'll learn how to earn anywhere and at any time, and potentially make a full-time income just by spending a few hours a day trading. You'll also get non-stop earning opportunities regardless of the economy being up, down, or sideways. You'll be done with your workday while most people are stuck in traffic on their way to a regular job. So, join our live trading room and trade live with us as you watch, learn, and earn. You're only a click away from kickstarting your trading career. Go to www.livetraders.com today and ask about the Professional Trading Strategies course.